Yeah, am I audible?
Yes, sir.
I'm explaining based to what I consider, what I know.
Okay. It's okay.
Let me use another broker. So this is the EURJPY. This is the EURJPY, and having analyzed the JPY pair, it is indicating some signs of what it is doing the opposite with what this one is doing. But however much, when I appear to the markets, I first got to know that price has reacted within these weeks and has some liquidity to consume at the extreme, maybe around this point. Then tackle some monthly point of interest. This is the monthly point of interest. Yeah, according to the expectations, this is the monthly point of interest. But all the way from the daily, the anticipations were bullish momentum. So if price had closed, if price had closed with with a week closure above this point, then we would have anticipated sales all the way up to this side. We would have anticipated this sales, but this strongly qualifies that the daily is in control, having broken structure all the way from this point. Yeah. So this is a breakout structure. I won't go deep into more refinements for all the way from these levels, all the way from these levels. No, I'll just start straight away according to what I considered. I might have considered a lot of information from this side, but it would take a lot of time. Yeah. So due to the fact that we have a lot of liquidity based on this, we have a lot of liquidity and we still have this because when it's go up to the monthly time frame, when remember this is a fresh month, yeah, it is a fresh month. So we still expect momentum all the way up to this, all the way up to this side, even to go ahead, even to liquidate this. But nevertheless, we still want to consider price printings. I still want to buy this pair up to around something like into this big imbalance because we have a lot of stuff to consider in this. But looking for intraday setups, getting to know that price has closed with body closures above this point, so I can consider this to be my break of market structure. And I'm getting to know that the daily is in control of everything. If I scale down to the 4 hour time frame, if I scale down to the 4 hour time frame, the 4 hour time frame is also doing what? Is also confirming that the daily is in control. So me considering the 4 hour time frame, it won't be a perfect suit for me. That means I have to consider the daily time frame. So if you check on the weekly time frame, what am I trying to coordinate? If you check on the weekly time frame, we have not had a body closures above. This would have been some type one, yeah, because this crazy momentum came in. It would have been some type one, but even price went ahead to react onto this. Price went ahead to react onto that. So it will be based on confirmations for us to take the sales. But however much I'm still considering buys. So being like daily had closed with body closures, and this is just a week closure. So daily closed with body closure. This is what I mean. That means I'll get back to you later. Gameplay. So that means I'm considering bullish momentum. I'm not considering anything like sales. However much sales can be coming in, but to my side, I'm not considering the sales. So scaling all out to the 1 hour time frame, scaling to the 1 hour time frame, price having reacted from the monthly area, from the monthly point of interest, it went ahead to shift. So this is when aggregations come in for us to sell, targeting these areas. Because because if you have to check from this area, let me first mark it, because this is the area of liquidity that we're having, or what this is our formation, the recent bullish formation. If you look at this momentum, this is a very big velocity momentum. It is a big momentum candle. So we go ahead to mark this area of liquidity as our point of consideration. Not until price breaks below this point for us to say that price has shifted down, we are considering more. We are considering the bearish moves, because remember, these higher time frames speak louder than the lower time frames. I cannot base on 1 hour to say price has shifted, then we are considering our sales all right to this downside. I want to first wait price to close below. For strong confirmations, even I want to see price close below this low. Are you seeing this low? This is the low that I'm talking of. So once price closes below this low and goes ahead to provide more momentum and closes below this low, I'll still refine. I'll still say that now markets have shifted to the downside. Even markets shifting from this point, it will be a strong confirmation that we shall be in for the sales. But however much, from that point, we are not considering that. Having broken structure to the upside with momentum candles, with big momentum candles, then we are considering this area as our point of interest. So as considering that area as our point of interest, uh, oh, sorry. So considering this area of liquidity, so we go ahead to refine the area of liquidity, because all we need to see from the area of liquidity, we want to see where markets shifted from. I think price went ahead to print this. It was on Thursday. Yeah, it was on Thursday. Price tapped on the monthly area of liquidity. Our price tapped on the monthly key level. It went ahead to formulate something of this kind. However much, it never came back to our point of interest based on how I was anticipating it. Price broke structure to the upside. All our way, it formulated the shift. But if you check on the 4-hour time frame, it went ahead to formulate this kind of shift on the 1 hour. So we are expecting price to come back to this area of liquidity. Then we take our sales. Price kept on selling. So if you check on the 4-hour time frame, I would like to base much on time frame coordination. But if you check on the 4-hour time frame, this is the kind of move. Price is not confirming anything that we are still like price 4-hour time frame is not in control of the sales. So it is the 1 hour that is in control of the sales, having shifted to the downside, but price is shifting all out to the downside to possibly mitigate these areas, because these are the areas of focus. So I applied something like impure liquidities all the way from this point, because if you look at this point, based on what I saw from our mentor, that is Hezbollah, based on what I saw this point, I came to realize that this point tried to hold price for a lot of it tried to hold price. We had a lot of price reactions, because this is when buyers price came to this point, it tapped. This is the point that I'm looking at. Price came to that point, it tapped. Buyers came in, the retail traders, as support and resistance. First tap, they came and bought from this point. Price broke below this level that I've just indicated. Then they came in for the sales from this point. They sold. Even price broke below this level, it came back, it retested this level. It retested this level. So in the way of retesting that level, we had some flip level around that point. We have some flip level around that point. This can be seen on the 1 hour, and this is more of a special case flip. Yeah, it is more of a special case flip, because if you look at the body closures below this point, because if you are to see all from this point, if you are to check very clearly, I'm going to mark this. I'm going to use this. So if you are to see, we have not had body closures below this week. For a normal case flip, we need to see we need to see a week to body closures. But instead, we have just liquidated this point. So on liquidating this point, it makes it a high probability setup for me when price comes back to that point. So we might see price coming back for the lowest liquidities, all up to that reactive liquidity engineering, then we buy off. But nevertheless, my first point of consideration, it will be on this flip level. So if I take it to the line chart, let me do something of this kind. So if I take it to the line chart, it will be something of this kind. If I take it to the line chart, it will be something of this kind. I'm marking this because this is where we had a break of structure lower, then we shifted, price came and liquidated. This is the special case flip. Price came, liquidated this point, but we didn't have body closures. But see how strong this level hold price. It tried holding price. This is what I mean. It tried holding price from this level. So I'm anticipating price to come back. If price there comes back to this point, but if I get other printings on the way all out to the downside confirming some other stuff, then I'll adjust according to the market's printing. But right now I'm not adjusting because this is what I'm anticipating. But remember, it is a game of possibilities. Even price can decide to end within this big fair value gap, within this big imbalance, because we also have some kind of flip from this level. Because this was a break of structure, we moved to the upside, then we broke lower. We are supposed to be selling from this point, but price didn't. But price didn't respect that. It was supposed to be some normal liquidity engineering, but price didn't respect it. See how huge the momentum is. So these are the momentum candles that are coming in. But nevertheless, I want to see price come back to this point. So this is some point of consideration, because if you are to take this line back in time, you find out that price reacted all the way from this level for so many times. So let me check out from the daily. Are you seeing price reaction on this key level? So it might also tend to hold price. So we are seeing some sort of consolidations all the way from that level. Price came, reacted from this level, some sort of consolidation, it came, reacted. Are you seeing the reactions on this price level? So it's like some higher time frame key level. So price can come and bounce off this key level. But me personally, I want to see price consume lower liquidities. But it doesn't remove the fact that price can come and give a reaction off this level. And however much we are seeing it that this is what Iceborne has just mentioned, that price the sellers exhaustion of buyers. When you see these kind of rejections, it just indicates that the sellers are trying to come into the markets. However much, since we have had the bullish confirmations, the price is still buying. So I'm anticipating to look at the buys. I'm anticipating to be looking at what? At buys. From this level, I'm expecting price to bounce off this level. To bounce off that level. Then if not that, I'm also expecting price to bounce off that normally these are reactive liquidity engineering. But nevertheless, I can also continue with the sales. Today being a Monday, and we're having some volatile news, and we are looking at the anticipation of Asia, London, what. So I might anticipate price to come back if it doesn't trigger to this point. Today's a Monday. If all goes well and price delivers on Tuesday, price comes to this area, bounces off, then comes back to this kind of formation, because this is a fresh formation that we're having. This is the only fresh formation that we're having. We're also having this because price went ahead to consume liquidities from this area of liquidity. Let me just show it to you. Price went ahead to consume liquidities from this area of liquidity. A formula is something of this nature, even might have some flip all out from this level. By price came and used the normal liquidity engineering. So I'm anticipating to see price move all out to the upside. If there gives off a reaction from this point all out to the upside, then I'll be selling from that area. That's where I'll be selling off to come and possibly mitigate this buying zone. But this is a game of possibilities. Price can reverse from anywhere. So looking at the 4-hour time frame, what do I want to show you? Price has not even formulated a transition on the 4-hour time frame. So let me go ahead to delete the whole of this. This will be some formation to rely on. This area of liquidity, it will be some formation to rely on. Because if you have to check, this is where we broke structure from. Let me take you to the line chart. That will be some area of liquidity to rely on. Yeah, on the 4-hour time frame. Then I can adjust this to that level. But if you are to use the 1 hour, that's when you have to see that liquidity consumption. Whenever you want to see liquidity consumption theories, that's when you scale into some lower time frames. But my scaling in does not go beyond 1 hour, 4 hour. If I'm playing around with the daily cycle, daily cycle from the daily to 1 hour, then from 1 hour to the 15 minutes for precise entries. Yeah. So if you are to check liquidity consumption all the way from this, we consume liquidities. We had this formation. We had this formation played around with this formation. So this is the only fresh formation that we might tend to consider. It is an inside formation if we are to check properly. It is an inside formation. That is the only formation that we are having. On top of that, I'll be considering this kind of formation because this is the clearest. It is the clearest formation. So that's the reason as to why I'm anticipating price. If price there comes back to this area, let me just make this. Let me just make this red. So if price there comes back to this area, that's where I'll be selling from. This can decide, the market makers can take this to be a trap for those early sellers. For the early sellers from this point, it can be a trap. Price can give a reaction off. Then in the process of giving a reaction, it might tend to shift all out from these points. And then we move all out to the upside. That is what we call some liquidity conveying, price preserving its liquidities to be used in the near future. So you might tend to have some inducement all out from this point, give a reaction, then price decides to move all out to the upside. And probably if it comes out this way on Tuesday, that's when I'll be in long-term sales. That is Wednesday, Thursday. Then I'll be closing off on Friday early morning. So if everything goes on well, but this is a game of possibilities. That is what I hope to see, but doesn't make it a must that it must happen that way. If price there delivers up to the upside with shifts on the 1 hour, then I'll be targeting this area. In the process of buying, I'll be buying to sell. I'll be buying to sell from that point. That is the anticipation for my EURJPY. So if you have to check all out from what I had marked, this is what I had marked. That is what I marked. I was anticipating to sell from this level that I told you. It is we have some flip level all the way from this formation. We have some flip. That is what I was anticipating to sell out to the downside, then to buy from. Let me just. Then to buy from these key levels. To buy from the flip and this reactive liquidity in Guinea. That's all I have with the EURJPY. That is my anticipation, me personally. But if I'm wrong somewhere, somebody can correct me. Then for the GBPJPY, let me start with the USDJPY.
Maybe Calvin, before you proceed,
Yeah.
Guys, it's very important to understand the aspect of time frame, movement, and liquidity convoy cycle, because you see, once you understand that, you'll understand the major moves, the minor moves, and how to take advantage of maybe shorter moves and all that. And in this aspect, we are just talking about intraday levels. When you're talking of intraday levels, you can take trades on sells, you can take trades on buys. But when it comes also to the weekly swings, as just Calvin said, like I remember there's a trade that we had. Was it EURJPY? It came to mature. We did analysis on Monday. It matured on Tuesday. And then that trade was able to run the whole week. And it delivered an RR of around 120. So the same thing applies. It just lies much on waiting. We can analyze these setups and then maybe they mature tomorrow or even on Wednesday. And then maybe on Wednesday, Thursday, Friday, it delivers some nice moves. And you see in this aspect, we are dwelling so much on the buys because if you look at the momentum moves, it's bullish. So whatever is happening is like more of a pullback for liquidation before we continue with the main direction where we're heading to. So when the market is pulling back, the price tends to struggle. But when the market is moving on the continuation of the main trend, it can even take like 1 day or 2 days and cover up the whole move. I hope that is clear. You can go on.
Yeah. Then checking on the USDJPY, my anticipations on the USDJPY. Let me use some other broker. So starting all the way from the daily, looking for the intraday setups. This is what happened on the USDJPY. So this is some sort of retracement back to some key level. Yeah, back to some. If you check around. So if you look at the weekly time frame, if you check the weekly time frame, I'm more of intraday, so I'll be considering the daily. But if you check on the affirmative time frame, price printed something of this kind. Price came, reacted off this region. We had some normal liquidity engineering from this level. It reacted. This was the last breakout structure, but we didn't have. It was some ordinary shift. Price later on came and shifted from this level. So price started selling off. So looking at this is some. If you check the monthly, uh, we're having this type of scenario. We're having this candle. If you look at this candle, this is a type 5. This is a type 5. And however much this was a strong area, this candle, you're seeing this candle, this is more of I'm trying to forget this name, but the name is not all that necessary, but I'm trying to forget. It is more of a demeter. Is it a demeter? But it is holding price. It hold price for the first time. Price came back. It held it for the second time. Then price is back at the same key level. This is a strong. It is a strong resistance level. I mean, it is a strong support level. It is a strong support level. So being a strong support level, we are having our type 5 area of liquidity. So this is more of a swing trade. If confirmations align, and we are saying that confirmations are already aligning using the time frame coordination all the way from the monthly, being our type 5, this is the our type 5, all the way being the type 5, somebody would have refined and look for this. Even we have some type 5 also here. This is the type 5. We're having a type 5 on the monthly. We're having also type 5 on the daily. This is the type 5. I'm pretty sure the desire to come and consume this type 5. You can see this all right from this point. Pretty sure the desire to come and test this at type 5. But it tested it around maybe 30%. So price had to come back. In most cases, price won't come back in all cases, but once we see something of this kind, we anticipate to see price come back. At that point, then consume liquidities fully, then we move to the upside. So this is what price did. Price came back, consumed liquidities from that 35 area. So when you take it to the line chart, we can see that price formulated a shift point all the way from this point, and price is showing some aggressive momentum moves. So this is where the shift point happened from. If you are to mark this side, that is where the shift point happened from. Also, this is some another extra confirmation. So price took out. If you take it to the line chart, this is the low that we had. We also had this low. So we had this first low and this second low. So price, we had the massive momentum. And we had the massive momentum. It took out both this low and this low, and printed this high. So taking out that, this is the kind of scenario that I told you. Whenever you see price, I'll give something of this kind. Price move like that, they move like that. As in the process of price shifting, it does something of that kind. Then you anticipate this to be a strong, or this will be an A plus setup, provided you align your confirmations with everything. Then you buy. You buy with a lot of confidence, hoping that price will buy off from these key levels, what, blah, blah, blah. But once price takes out around two highs or around two lows, then expect it to be a strong trade. Just hold that trade. So that is the kind of scenario that price formulated around this point. So price went ahead, it took out this high, it took out this low, it took out this low with that aggressive momentum move. If you take it to the line chart, so me getting to know all that, I was anticipating to see bullish moves. So price started adjusting. So this is the kind of scenario. This is the area of liquidity that we're having. That is the area of liquidity. That is the area of liquidity that we're having, but we're also having this kind of formation that might try to hold price back to our buying areas, blah, 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 provided price printings are just clear as I'm going to explain. So this is the kind of scenario that we're having. This is the area of liquidity that we are having, that we are all focusing on to support our buys with this aggressive candle momentum. This is candle momentum. These are all candle momentums, aggressive candles, indicating that we are still bullish, having broken above this high that price had printed. This is the high that price had left. We will trace back to our buying areas, maybe something like this. Then price started pushing to the upside. Then this is the area of liquidity that might try to hold price lower. This is the area of liquidity that might try to hold price lower, but nevertheless, just having the higher time frame picture, the price is from some 35 area of liquidity. So the higher time frames the higher time frames are ever stronger than the lower time frame. So this daily time frame is stronger than the 1 hour, and the monthly is stronger than this daily time frame. So having that in mind, then we need to scale down to something like 1 hour time frame. So scaling to the 1 hour time frame, all away from what price was doing. So this is the aggressive moment and then came in to shift around this point. I hope you see this point maybe. I hope you see that point is very clear. That is where we had body closures above that point. So price shifted from that point. But from the 1 hour, the shift happened from this point. That is where the shift happened from. And this is the only formation that stands out, and this formation. But nevertheless, it will take a lot of time for price to come back up to that point. So normally, we tend to consider the fresh printings of price, but nevertheless, we can also consider what price is leaving out for us in the previous scenarios. So this is what price I was doing. I think this was Tuesday some month back. Then price came mitigated because this was the formation that we had. This was the last break of structure that we had, even tried to consume the liquidity from that point. Then that is the scenario that was remaining. So in that case, we had, let me show you what we had, because I remember I took these buys. We had something of this nature. I want to show you. So we had price breaking lower. If you take it into the line chart, this is the scenario. Price broke lower. Let me try to adjust this. So this is the kind of scenario. Price broke lower from this level. Let me show it to you. Price broke lower from that level, then it shifted. That is where the shift happened from. So leaving this as the formation, because we never had an inside formation, neither did we have an outside formation. This was the only kind of formation that was remaining, that price had printed for us. So taking back into the candle, price came, reacted. So based on aggregations, one might be confused whether to take trades on to the using this formation. So based on aggregation, somebody would have left out that formation, wait for price to react within that formation, and wait within in the same time frame. So when you're taking trades based on aggregations, price comes, taps within the area of liquidity. So you're finding problems with refining, or you're finding problems with identifying liquidity consumptions. All we need to wait for to see price liquidation, to see price liquidations. Yeah. So this was the liquidation that was happening. If you take it to the line chart, this is some curve. Price shifted from this point. I hope everything is clear. That is the point where price shifted from. So price shifted from that point. I don't know whether you're still on, but that is where price shifted from. Price shifting from that point, you look at liquidity consumptions that were happening from this leg. Price left out this formation. This is the formation that I'm talking of. Price left out that formation. Let me go ahead to delete this. Price left out this formation, but instead price came back and consumed it with this red candle that you're seeing. It had the wick into this formation, so price consumed that. Price printed this as the fresh formation. Price came back and consumed all this. Price printed this, then it instead decided to shift to the downside. But getting to know that we are still in the bullish move, we didn't want to find ourselves forcing the sales. We wanted to find ourselves having those, but no, it is kind of good being taken out when you're following the trend, but it is always bad being taken out when you're on the wrong side of the trend. So price formulating this shift, we got to know this was some kind of inducement. They're trying to induce people to come in for the sales such that they can take them out. So we had liquidity engineerings around this level. We had some liquidity engineerings around that point from this candle that you're seeing. We had a lot of liquidity in here. So you can take the body, because I think that is what I took. Then we had those buys. The first TP was around that point, but that is not what has brought us here. That was the TP. That's where I exited from. So that was the scenario. But on the day time frame, back to the main sense. On the day time frame, that was the area of liquidity that we are having. This is the area of liquidity that we are having that is left out for us. So we are anticipating, all are we checking from the 4-hour time frame, There's nothing to consider, only we're having this flip. And this flip is also visible on the 1 hour. Using the time frame coordination, this is the kind of level that I'm talking of. Also, you find that price is leaving for you this flip. That is the flip level. Why am I considering it as a flip? Price broke structure to the upside. It started playing its games. It broke lower. We broke lower because this was the low that price had printed for us lastly, and it moved to the upside. These were all structural liquidities. These were all structural liquidities. So this was the low, that the last low. This was the last high. So price broke lower from this point. It broke lower. So we expected to use this as our normal liquidity engine, so as we can sell off all the way to the downside, but it instead failed. Price did not go in for that. So that is the first flip point that we are having, and price did not go ahead to consume it, or what, price did not tap in it. Price did not trigger around that flip level. So nevertheless, me personally, I'm not considering that flip level. Yeah, why? I'm not considering that flip level. I will explain the reason as to why. But it can also hold price. So this is the kind of scenario from this ordinary shift, because we're having an ordinary shift from this point, because we had price. Where's this cafe? We had price liquidate that point. We had price liquidate that point. So price liquidating this point, it just grabbed liquidity. Yes.
Calvin, can I cut you short?
Yeah.
Because I can see guys are concentrating. I just want to do a confirmation before you proceed on. Are you guys following? I need to see on the comment section if you guys are following, so that I know you're together, because you know when the Zoom is expired, sometimes the meeting might end prematurely, and what you want is guys to get these things clearly, so that when they are following their trades, they know where to enter, exit, and all that. All right, I can see a good number is following. So what I'll do again for the last time, because I don't want this meeting to end prematurely, allow me again, guys, because you are left with like 4 minutes before the meeting ends. Let me again end it, and then you guys rejoin back, and then Calvin will proceed. I don't know if you're okay with that, Calvin.
Yeah,
so that we can have extra 40 minutes, because there's also other pairs that are allowed to look at. So let me end the meeting right now. We are 19, and just rejoin back. Once the meeting is done, I'm going to pay for the Zoom so that we don't have this kind of distraction. So let me end the meeting. You guys rejoin back so that we end the meeting in the right way.